Hey everyone, happy Thursday, August 1st. It's about 10:30 in the morning on the West Coast, and it's time for another market update. Welcome to August. August has actually started off a good note for us. It's a really busy week. We got inflation, we got appreciation data, we got home sales data. It's a Fed week. It's also jobs week. So let's get right into it. This might be a little bit longer video, but all good news for the most part. First thing, going back to last Friday, we got June's PCE inflation report. This is the Fed's favorite form of inflation to take a look at, especially this core number. Came in basically as expected. Headline was up 0.1%. As expected, core up 0.2, a little bit higher than the 0.1 number. If you look a little bit closer, see they round up. It was actually 0.8 and 0.18. Shelter continues to moderate, which is really good to see, but we still have a lot of room to gain there, which is positive, knowing that that's coming in, forward to help these inflation numbers come down in the future. But overall, like I said, not as good of a report that the markets were hoping for, but also not a bad report. So these days, that's a positive. So we didn't really have too much negative effect from it coming a little bit higher on that core number. Next thing we got, this was the Fed week. So yesterday, the Fed concluded their two-day meeting for their July meeting. There was no change as was expected. They did not cut or raise the rates, but it did make it sound more and more likely that September cut will be coming. So first thing that they do is they release a statement. In that statement, it came out a little bit more hawkish than everybody expected. There was some talk about having to see inflation still coming down towards that 2% number, which the markets didn't necessarily like to begin with. But then afterwards, Fed Chair Powell has a press conference. In that press conference, he sounded a lot more dovish, a lot more talk about the labor and the labor market weakening. Someone asked about if they do a rate cut, would it be a one-time thing or a process? He said process, so indicating multiple rate cuts. So overall, more dovish tone. The markets really liked what came out of that, and the bond markets rally, which is good for mortgage rates. So, he didn't come out and say, "Hey, September rate cut, that's what we're going to do," but sounded like someone that wanted to say that. Basically said everything except for that. Next thing we got was a new appreciation data for May. The two big reports we look at are the Case-Shiller and the FHFA. FHFA differs from Case-Shiller where it does not include jumbo and cash deals, so it tends to be a little bit lower priced homes. And again, appreciation continues to go up. Seasonally adjusted was up 0.3% month over month. Non-seasonally adjusted almost a full percent. Year over year, a drop from 6.4 to 5.9%. But again, the last May's number was a really big number, so they're replacing that. Still almost 6% year over year right now. And then the comment here from Brian D. Luke, something I deal with a lot. The waiting game for the possibility of favorable changes in lending rates continues to be costly for potential buyers as home prices march forward. So people that wanted home prices to drop, that hasn't happened. That's people have been asking that for a couple of years now, and home prices continue to go up, which is costing them money. By the time they do buy, house is going to be a lot more. So good to see for current homeowners, good to see for our economy in general that, home prices continue to go up. Not good to see for people that are hoping to see those prices drop so they can get a good deal. Next thing we got was June pending home sales. This came in higher than expected, 4.8%. Keep in mind it was a really low number the month prior, so that plays into it. It's expected to be about 1.3% gain. Year over year now we're down 2.6%. So down, but not down, as much. I think that came down from like 5.4 last time. So we know mortgage rates, things like that have, been obviously affecting pending home sales, but it was good to see a positive report. So there's more activity. People go pending. They didn't close, but went pending in the month of June. Next thing we got, it's jobs week. So very important. We know the Fed's paying really close attention to all this kind of stuff. So the first thing we got was the June JOLTS report. So this is job openings. Job openings creeped up a little bit, but it's still way 10% down from last year. You can see where it spiked up close to 12 million. We're down to about 8.2 million. And we know these numbers are kind of double counted. You see all this data or talk to hiring managers where they leave job postings up to show like the company's hiring and all that. So, it's just not necessarily the most accurate data, but, part of this report, we did see the quit rate went down, the hiring rate went down, which is all showing, basically the labor market weakening. Next thing we got out of that was the ADP. So we got July's ADP. This came out yesterday. This is private payrolls. The estimate was supposed to be about 150,000 new jobs created. It was 122,000 jobs created. So good for us. That number came in higher. That would have been bad. You can kind of see the breakdown here where they gained and lost jobs here. So small businesses down 7K. Keep this in mind. We have that birth death model for the BLS. They keep saying that there's tons of new small business jobs where the ADP keeps saying the opposite. So we'll have to keep that in mind for tomorrow. really the gains were in leisure hospitality, but lower than they have been. Construction, so maybe this is jobs because we know there's not a lot of new stuff coming. So maybe this is finishing off current projects, and then trade, transportation, utilities was a big gain. Job stayers and switchers dropped. Wage inflation stuff dropped. So this was a really good report for us. So this coupled with that Fed press conference yesterday really came in our favor. And like I said, July BLS is coming out tomorrow. Unemployment is supposed to stay about the same. We're due for a good report there. A lot of things in our favor. This ADP report came in our favor. The sample week they used for this initial jobless claims was a higher one. So, this BLS jobs report has been a pretty big headwind for us over the last couple of years. It's been, just when we think we have momentum, this one's come out not in our favor and it's kind of, made rates go up. So fingers crossed this one comes in our favor finally. So we'll see. And then the next thing we got today, again, something positive, not necessarily for people that had to file for unemployment, but initial jobless claims was supposed to be about 236,000, came in at 249,000. These keep going up. Continuing claims keep going up, which is probably the better indication of where our economy is heading. People not being able, basically staying on unemployment means they're not be able to get jobs. And some of those people drop off and basically never get a job. They just expire their unemployment stuff. And those people aren't counted anymore. So overall, the job market is definitely weakening, which the Fed seems to be paying attention to, which is good for us in the long run. So average year 30-year conventional, where does that leave us? Last week, we were at 6.91. Today, we dropped down to 6.62. According to this lender survey, over the last 52 weeks, last year, the lowest it's been is 6.61. So we're basically the lowest we've been in a year today. This BLS jobs report tomorrow will have a big say in where we go from here. But everything's trending in the right direction. The Bank of England cut their rates today. We know the European Bank and the Bank of Canada had previously cut their rates. So all is definitely pointing in the direction of, the Fed cutting their rate, probably by quarter point, unless we get some really good data. Maybe we get a half a point that happened, but at their September 18th meeting. So that's the data circle when, the markets won't wait for that. They'll start building this in now, but that's hopefully when we're going to see that first rate cut from the Fed. Like I mentioned, tomorrow we got the BLS jobs report. That's a huge one. Then we're going to get CPI August 14th, PCE August 30th, and then we'll get another BLS and CPI before this Fed meeting. So, like I said, all good stuff. Rates definitely seem like they're turning down. We could always be throwing a curveball, but, especially with that BLS jobs report, but all positive data, all encouraging, optimistic stuff coming out. So that's great to see. So if anybody needs anything at all, please don't hesitate to reach out. I wouldn't wait for that rate cut if you're in the market now, because probably that rate cut will just stimulate more activity, more demand, which usually does not mean prices coming down. So just keep that in mind. Anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.